Welcome to the latest Eversheds Sutherland Legal Insights podcast.
Hello and welcome to today's Future of Bioenergy webinar, taking a look at global trends, potential challenges and pivotal opportunities in the bioenergy industry. My name is Kieran Aurora, a partner here at Eversheds Sutherland and a specialist in clean energy projects and M&A. This webinar is part of Season 4 of our Global Energy Transition series, building on the success of our previous energy transition seasons. We continue to explore key energy trends to bring you the latest analysis and insight. I'll shortly hand over to my colleague based in the Netherlands, Cornelius Litt, who will briefly run through the key trends that we're seeing in bioenergy right now. Following that, we'll jump into a panel discussion, which I'll be hosting, and we're fortunate to be joined by Sin French, who has a wealth of agricultural and energy experience in the States with LF Bioenergy, and James Reed, an investment manager at Schroders Greencoat, specialising in sustainable assets. I'm also joined by my colleague Robert Lampkin, based in the States. In terms of housekeeping, today's session is being recorded. It will be shared with you by way of a follow-up email, as well as being available on our website. If you have any questions through the session, please do use the Q&A function. I will be monitoring that, but it's a short session, so if we don't get time to answer your questions within the session, we'll follow up with you directly. So without further ado, I hand you to my colleague Cornelius to take us through the key trends in the bioenergy sector. Cornelius.
Thank you very much, Kieran. Hello, everybody. Thank you. Increased investment. The sustainable bioenergy market is witnessing a surge in investment in public and private sectors. Governments worldwide are introducing financial incentives, subsidies and grants to promote the development. This influx of capital is being directed towards advancing technologies, infrastructure development and research initiatives. Those are driving innovation and increasing the overall capacity of sustainable bioenergy systems. Let's look at some prime examples. In the United States, the Inflation Reduction Act 2022 impacts the status quo through the extension of production tax credits to projects, including biomass starting construction before 1st January 25. The Act also provides support to the biofuels industry, including the revival of previously expired biofuels credits. In April 24, the European Commission approved a €900 million scheme from France to support companies investing in the use of biomass and renewable hydrogen in energy and fuel production. In the past decade, Japan and South Korea have significantly expanded their reliance on woody biomass for energy. This surge has been largely driven by government subsidies, which have aimed to position woody biomass as a renewable energy source. Technological advancements continue to improve the yield and cost effectiveness of bioenergy production, but also reduce emissions associated with traditional biomass processes. Breakthroughs in biomass conversion technologies, such as gasification, anaerobic digestion, and pyrolysis, are enabling the transformation of a wider range of organic materials into energy. What are some examples here? Traditional methods like direct burning are being replaced. Biomass can be gasified to produce syngas, which is suitable for use to generate electricity or biofuels. Pyrolysis equally produces syngas as well as biochar and biooil by heating biomass without the presence of oxygen. An increasing number of power plants are utilizing biomass coal-firing, which involves burning biomass alongside coal. By lowering emissions of greenhouse gases and improving the sustainability of traditional power generation, the approach makes it possible to gradually switch from fossil fuels to biomass. Regulatory support. Many countries are setting ambitious renewable energy targets and implement supportive legislation aimed at reducing greenhouse gas emissions. Additionally, international agreements and commitments to sustainability are pressuring nations to invest in renewable energy solutions, leading to a more favorable landscape for bioenergy projects. Again, the examples are manifold. At the COP28 UN Climate Change Conference in December 23, governments agreed to work together to triple the world's installed renewable energy capacity by 2030. The European Renewable Energy Directive 2 sets an overall renewable energy target of at least 42.5% binding at EU level by 2030. The German government has set the target to increase the share of renewable energies in the overall energy generation to 80% by 2050. The German energy transition initiated already in 2000 includes a program for coal phase-out by 2038, as well as a climate package. The UK has committed to a 68% reduction in emissions by 2030 as part of its nationally determined contribution towards the Paris Agreement. The next and last key trend, bioenergy with carbon capture and sequestration, in short, BECCS. The global BECCS market size was estimated at roughly $211 million in 2023 and projected to grow at a compound annual growth rate of approximately 20% until 2030. Primary driver for the growth also here being the global push to combat climate change and achieve net zero carbon emissions. Carbon taxes, carbon credits, and emissions trading schemes incentivize the adoption of BECCS by assigning a monetary value to reducing or sequestering carbon emissions. Again, some regional examples here are the BECCS market in the US is experiencing robust growth. A major catalyst is the increasing emphasis on decarbonization across various sectors again. Also here, the Inflation Reduction Act 2022 provides significant financial incentives, carbon capture technologies, and making investment in BECCS more attractive. Last but not least, the European Union's Commission becoming climate neutral by 2050. Legislative frameworks such as the EU Green Deal and the Fit for 2055 package provide a clear regulatory pathway in that regard. That concludes the section on global key trends in the bioenergy field. Thank you very much. Back over to you, Kieran.
Cornelius, thank you. A tour de force as always. So now we'll go to the panel discussion, and I am delighted to be joined by Sin French, James Reed, and Robert Lampkin, and I'm sure our audience are really looking forward to hearing all of your views on where the opportunities and the challenges lie in bioenergy. Let's start with the energy trilemma. The old chestnut of how we provide inclusive, secure, and sustainable energy. It's a framework that's often used to set policy priorities, and there's some big challenges in there and also some assumptions. Is there necessarily a compromise between sustainability and affordability? What's the role of bioenergy in that? And will it be impacted by cold winter, war in Ukraine, and the trade disruption that we're seeing in the Middle East? Maybe I'll ask James if you could start with us on this, and then we'll work our way around the panel for their views.
No, hello, everyone can hear me now. I should introduce myself. Hi, James Reed, investment manager in the energy transition team at Schroders Greencoat. Schroders Greencoat being a major investor in UK renewable infrastructure. I think we're known as being number one in wind and number one in solar in terms of financial investors in the UK. And in biomass power sector, our funds that we manage own just under 20% of the market here in the UK. Good. So the energy trilemma. It's a big question to start off with. Affordability is the key, I think. Different people express it in different ways. I like Bill Gates's view on the sort of the green premium. What's the green premium that people are willing to pay, whether directly or through taxes that are then socialized through society? Biomass, which could be split into solid biomass combustion, as Cornelius alluded to, which is evolving into gasification, etc., pyrolysis. You can separate out that, I think, from biogas through anaerobic digestion plants. You could even separate it out again into plant-based, crop-based, and waste-based feedstocks. So these are different markets with different affordability aspects to them, starting with, affordability. What's the green premium that people are willing to pay? So if you've got a feedstock, like in the biogas sector, where you've got crops growing in the ground, energy crops, then there is a high marginal cost of growing that plant biomass. You need to harvest it, store it, treat it before then digesting it, turning it into gas, and then if it's biomethane, injecting into the grid. It's very expensive. It's much more expensive than sticking a straw in the ground in Qatar or the US, and let alone Russia. So I think the fact of the matter is that there is a spread between what biomass plants, biomethane plants need to secure in revenue over the feedstock costs. In previous years, that's been supported by government subsidies, directly taxation, or indirectly through socializing costs through electricity bills. Interestingly, as the biomethane sector has come in, replacing the biogas to CHP sector, the electricity aspect has reduced. And what that's basically meant is going towards subsidy regimes that have not traditionally been socialized through the system. Costs get recharged to electricity customers. Historically, they haven't really been recharged to gas customers. It's too sensitive. People pay gas to stay warm in winter. So I'll pause and won't go into more detail on that, but just considering waste as an alternative and maybe an anecdote. Whenever it was 12 years ago, one of my first forays into biogas sector in the UK was food waste plant, new build. Waste feedstocks attract a gate fee, or a tipping fee as it's known in North America. The financial model said that gate fees would be sustained at a level which would support 50% of revenues, so significantly reducing the need for revenue support for your power offtake, your energy offtake. But then, as a consequence of the market dynamics at the time, there wasn't enough food waste to go around, and then the price of the gate fee crashed. What I'm trying to demonstrate here is that even in kind of waste sectors where there's a useful requirement for a biogas or biomethane plant, if subsidies aren't there and you're relying on another market factor, I think we as investors need to be careful that other market factor, in this case gate fees, is there and can be relied on in the long term before writing the check, so to speak.
Yeah, no, thank you for that. And that unusual facet of the bioenergy sector is something I'd like to spend a bit more time unpacking. But before we go into that, I just want to give Sin and Rob the chance to comment on kind of the headline kind of energy trilemma issues, and whether from a US perspective you see the security or affordability issues in a similar light. So we've just heard from James on the affordability challenge. Sin, anything you'd like to add from a US perspective there?
Well, thank you, Kieran. I'm really excited about the U.S. bioenergy business because, frankly, the globe wants to eat like the U.S. They want access to protein and they want access to safe food. Consumers also are very trending towards sustainability, climate change issues. So we are really all a part of the biggest topics of the globe. So sustainability, food insecurity, climate change, and how national security is a part of that, advancing clean energy. And really, there are many opportunities for U.S. food producers when it comes to the energy space of bringing an energy model alongside their dairy farm model. So I feel very bullish about where we're heading as a globe, but it certainly is going to take a lot of participation together. And I was recently talking with a former undersecretary in USDA, just in fact yesterday, and she said, we need to really be about evolution and not revolution when it comes to sustainability goals and objectives, so that we are doing a continual progress with sustainability, which is also helping climate change.
It's a great point there, and it makes the change sustainable in all of its meanings if it's something that we can continue to make on an ongoing basis. Often sustainability is used to talk about the green credentials, but green credentials don't do as much good if they're there for a week and not there for the long-term future. I want to talk a bit more about the regional differences. Just before I do that, though, Robert, anything you want to bring in from the US lens there, in particular on the security, sustainability, affordability trilemma that we've just been on, and then we're going to talk a bit more about why it's different in different parts of the world.
Sure. Hi, everyone. I'm Rob Lampkin, a partner at Evershed Sutherland in the Washington, D.C. office. And I think from my perspective, at least, we are seeing a lot of interesting transactions, and I think there's a willingness in the market to pursue like biofuels transactions. But the primary concerns, at least from the legal perspective, are the traditional regulatory certainty, and I would include within that kind of the tax treatment that Cornelius mentioned, but also, frankly, financing certainty. And we're seeing a lot of movement on that. The fuels is a little bit behind, at least in the U.S. markets, than the power, but there's certainly an interest in moving in that direction and in willingness to take on that green tax surcharge or whatever we call it to move towards a better planet.
Thank you. It's really helpful. Now, a lot of the big trends we're talking about here are genuinely global. We've heard from Sin on kind of the world's desire to feed itself to live a certain lifestyle. But despite that, there are huge differences regionally, and Cornelius has told us a bit about that. So I'd be interested in your views on why that is. Even looking within Europe, we see quite a range of policies and attitudes towards bioenergy. You've got the government in Ireland looking to invest in biomethane for energy security reasons. You've got a somewhat mixed message in the UK as to what we're doing with our waste and some of the fragility that James alluded to in the finance structures that we've had here. Looking further east, Ukraine actively investing in biomethane as a valuable export commodity. So you see a big range in policy attitudes towards bioenergy. And I just wondered whether we could go into that in a bit more detail and see why we were seeing such big regional differences. Maybe I'll start again with you, James, and get your views on that. As a lawyer, I tend to look at the regulations. I'm sure that is the heart of all answers, but you're an investment professional. I'm sure there's a more sophisticated answer.
No, you've hit the nail on the head. It's all about the regulation, and it goes directly from the affordability point, right? It's you need a level of support or a market created by governments in order to pay that green premium necessary for this more expensive form of energy versus gas from Qatar or the US or Russia. Yeah, so I can talk for a couple of minutes if you like about UK and other EU countries perhaps.
Yes, please. The contrast perhaps in why it's going well in some markets and less well in others. I think that'd be quite interesting. Great.
So yeah, and I'll stick with biomethane unless I'm pulled aside. So the UK has been a bit of a roller coaster over the last decade or two. We started off with subsidies, fairly direct subsidies for biomethane, biogas with the feed-in tariff. It changed to ROCs, it changed to CFDs. The biomethane started to be subsidised through RHI, which is directly general taxation rather than added to consumers' bills, and then that sort of fizzled out, and then we went into traded renewable fuel certificates. In terms of combustion, just checking that the production of electricity hasn't been subsidised for years, maybe 5 years. I mean, since 5 years ago, since I joined Schroders Greencoat, that's the ROC subsidy ended. Solid biomass combustion plants can't compete on a cost per megawatt hour basis with wind and solar. So that's important to note as well. Back to biogas. In the UK, tradable RTFOs, these fuel transport certificates, were from an investor's perspective a little bit dead on arrival. There was no attractive floor price. There was no floor price, and that's a bit of a missed opportunity from the learnings of the ROC market in the early 2000s, when there was a floor price and a kind of structural shortfall that supported that. Nonetheless, UK is in a more supportive regime now. Like other countries like Italy, there is an expectation of perhaps incrementally more supportive tariffs through time. But in the meantime, I don't think there's many plants being financed right now in the UK. Contrast that with the EU markets. Written down here, the EU's got through Repower EU a target of 340 terawatt hours of gas in their target. Absolutely phenomenal amounts of energy through biomethane production, and that's to displace Russian gas, right, or imported gas. the directives are the relevant directives from the EU are RED II, RED III. They're basically mandating minimum proportions of gas supplied with non-fossil fuel gas. Different countries have applied it differently. Germany has been more prescriptive about biomethane proportions and hydrogen-derived gas in the system, the gas system. So that's quotas that people have to meet, but there's also policy support, ongoing policy support for biomethane plants. So that means the price per unit that you're selling biomethane doesn't have to be as high as in other jurisdictions to get a project finance. Contrast that with Ireland. The situation there is that there's been a couple of corporate deals where corporate DHL has purchased biomethane on a long-term supply agreement basis, and that's set a bit of a benchmark in the country. It's at a high price, well over 100 euros a megawatt hour. And what that's done is the politicians and the officials are now thinking that the private market can do this on its own with no subsidies. What it actually means is that a higher price needs to be achieved and contracted out for long term with between the producers and the corporates. But it's very much a kind of a private market approach that Ireland wants to go down, rather than government support and sort of dictating the proportions of quotas in different subtypes of fuel, like hydrogen derived and biogas derived.
And of course, governments can provide support in a number of different ways. So a flat subsidy is one way, but the policy environment, the predictability, the stability that makes you feel secure in making a long-term investment comes from a number of other nuanced levers that governments can pull. It's not simply about putting cash into a business line. And again, I'd be interested from the views from the States on this, because for a long time we've seen moving policy in North America on sustainable energy, and there's been a lot of profile given, a lot of excitement around the IRA and other policy initiatives in the US. And I just wondered, not to speculate on the election, but I just wondered whether at the moment the investor appetite was being emboldened by that long-term industrial strategy that's linked to sustainable energies. Are you seeing that behaviour translate into investments in the States? Maybe I'll start with you, Rob, and then invite you to comment afterwards.
I think we are, and I think I would say it's not necessarily in its infancy, but it's growing, and it needs to grow more. On the power side, again, we have a fairly mature tradable renewable energy certificate market in various states, and I don't think the biofuels market is quite there. I think on the kind of negative side, we've had some issues with fraud in the certification processes and things like that. But I think as we move forward, I think everyone is willing and ready to get there, but we're, in my view at least, not quite there yet.
Okay, that's pretty helpful. And you mentioned fraud there, and bioenergy has had bad PR over the years. Really, there's been lots of scandals and missteps, which I think is a real issue for investor appetite. You've had cash for ash, you've had the Puffer gas going over in the UK and Ireland, where projects have been built and financed on a premise that hasn't always turned out to be real. So I'd be interested in your views. You've established a business which is all about garnering new appetite and new interest in the industry, bringing together energy expertise with agriculture and getting two very different industries to talk to each other and realise what the common benefits might be. And I wonder how you've done that, especially with that background of, some people, all they know about bioenergy is some bad news stories. So can you tell us how you've gone about that, some of the challenges that you've overcome, please?
Absolutely. So thank you, Karen. My whole life has been about advancing U.S. dairy farmers and ranchers. That's my purpose in life. So when I helped co-found LF Bioenergy, we determined that we would be transparent, we would be trustworthy, and we would have a farmers first culture, which means that, when you look at the trends every day about the dairy industry in the United States, there is slated to be $7 billion worth of money spent on new milk and cheese plants in the United States by 2026, So we are tracking the trends every day. And that doesn't mean there's going to be more cows. What it does mean is those cows are going to be moving closer to those milk and cheese plants. And so on the energy side, EPA estimates that the U.S. needs about 15,000 digesters, which would be all feedstock, so livestock, landfill, food waste, etc. We only have about 450 operational digesters today. So the need for biogas is only increasing. And on the farm side, I just heard some figures yesterday at the National Milk Producers Federation conference, and they said that 58% of farmers are utilizing innovation and technology. So you know that the investment needs to keep occurring to allow farmers to keep investing. So what about those other 42% of farmers? So my point is this, Karen, is that every single day I'm tracking what are the trends that are going on both in the energy aspect and on the farm aspect, because it is getting back to your comment. There's been a lot of kind of bad players out there, which very much impact our farmers. And remember, that's my purpose in life.
Fantastic. That's coming over loud and clear, Sin. And that depth of expertise is essential. You know, people that are fly by night get found out very quickly in a sophisticated business like this. And James, I'd be interested in your view. So you mentioned in passing, you know, Schroders Greencoat have got a phenomenal track record across a number of industries, including solar, wind, and bioenergy. And I just wondered, for listeners that maybe have some experience with the better established technologies like solar and wind, if they're listening and thinking, well, maybe bioenergy next, maybe that's an area that we should look to. What advice would you give them as they look to diversify their portfolios and take on an asset class that, let's be honest, behaves quite differently to a wind turbine?
Yeah, absolutely. Yeah, no, there's a fuel involved, and there's a fuel and there's an operating team, whereas a wind turbine or a solar plant don't have those things. There's more operational risk, and you've got the risk on the feedstock as well. To the sort of reputational side, in the UK, you say the word biomass, and everyone thinks of Drax. It dominates. You know, it imports 7 or 8 million tons of biomass pellets per year, and they're always in the news. It produces 4% of the UK's power. It's really important for grid stability, but at the same time, it's been a couple of months ago, it was fined. I think it was £50 million for misreporting its biomass sustainability sort of criteria. So with that in mind, it's very, very important, I think, that if you're involved in the biomass industry, you have to be sustainable. We at Schroders Greencoat want to use the word sustainable biomass in all of our communications. And you know, we've got an internal initiative set up between our asset management and ESG teams to be able to do that. It's not as easy as you think. With EU green taxonomy, different accreditation bodies for ESG, you've got to tick all the boxes to be able to say sustainable biomass, but it's fundamental to the trust in the industry and the risk of future potential negative regulation if we get it wrong. But yeah, no, I mean, just to sort of summarize, we've got an initiative going to define and have sustainable biomass that's going to comply with EU taxonomy, RED 2, RED 3, ISO standards. There's different bodies. Roundtable on Sustainable Biomass is another one, a long list. And once we nail that definition and we ensure it applies to all of our biomass facilities that we manage, which I'm confident it will, then we can start using that term and be proud of it. And that's where the industry needs to go in the future, not just in the UK, but globally, in my opinion.
Yeah, no, great point. And it'll surprise no one. They've got a lawyer nodding along saying that regulations are everything. Very important indeed. So you're preaching to convert it here. I'm conscious of time. Last question that I think we're going to have time for, and apologies for those that put some in the chat that we not had time for everything. I just want to touch on quickly the technologies needed. So we've heard some huge ambitions for where people want to get to, the role that bioenergy might play in the energy mix. But the investment right now today is much more modest. Is the reason for that the lack of technology? Do we have the tools in our kit bag to actually deliver on these ambitions? Maybe I'll reverse the order. Maybe start with you, Rob, then Sin, and then James for a last word. And if you could just keep your answers really brief, because we're right up against time now. So, Rob, to you first.
I think we need to move. We need more technology improvements. It's coming, but it's not here.
Superbly to the point. Thank you, Sin.
Yeah, I mean, if we're going to get to 15,000 digesters, the U.S. needs a lot of technology and ways for those investments to occur. Things like the Inflation Reduction Act have certainly helped. Politically, we need to stay in line with what the industry needs and what our farmers and ranchers need.
Fantastic. Thank you so much. And James, last word from you. Anything you want to add on the technology front?
Well, only to say there's no silver bullet in terms of one technology over another. If it's wind, if it's solar, if it's solid biomass combustion, if it's biomethane. I think everyone listening into this webinar knows there's no silver bullets, and we need a mix of everything in the future energy mix. Biomass, bioenergy should be part of that.
Brilliant. Well, thank you so much, Sin, Rob, James, for your expertise and your time. Amazingly, that is us up against time. That's the half hour gone. So as I mentioned at the start of the session, it's been recorded and it will be sent out to you by email and made available on the website. If you're interested in what we've been talking about, please do follow Evershed Sutherland Energy on LinkedIn, and we'll give you the latest updates on our energy transition series. And on that note, I will say thank you for your time and attention, and I look forward to continue the Q&A with you as we go forward. Thank you.
Thank you for listening to the Evershed Sutherland Legal Insights podcast.